Basically, we're going to go over the kind of the dynamics of the industry and why we are running these campaigns that we are running and what the significance is, and also what the importance of these campaigns is to our clients and to the industry in general. Because the insurance industry is basically made up of several key players, and the first key player is the insurance carrier. That's basically the insurance company, and these are names that are pretty familiar, people that you see out in the media pretty frequently. And these insurance carriers create what they call insurance products, which to you and I are insurance policies. And basically these policies fall in, oops, I hit an extra button there, but these policies fall into general groups that we're all familiar with: life insurance, health insurance, property and casualty is what you have on your home, on your car, things of that nature, and then annuities. And annuities, for those who are not familiar with them, are an insurance product whereby you would give an insurance company a fixed amount of money, say $10,000, $15,000, and then they promise to return to you a return on that on either a fixed rate of return that's set up front, or a rate of return determined by Dow Jones or S&P, just some other index. There are different ways to do that, but it's basically an investment contract. And really that's the one that is the most valuable to the industry and also to our clients, because there is there's obviously a lot of money changing hands there, and it's a very highly commissioned product. So you have basically the insurance carriers are the manufacturers of these products, which are the policies, and the insurance agents out in the field, the insurance agent that sits across the kitchen table from the eventual consumer that buys the policy, they're kind of on the end of that supply chain, because they are the direct field sales force that is actually making the sales. Now, there are differences between the carriers and the agents. The insurance carriers tend to be very conservative, very kind of immobile organizations, and they need to have a field sales force, obviously, that's out there writing policies and making money for them. But in the case of the larger carriers, to directly train, manage, and supervise a large field sales force is an extremely costly and difficult proposition. And they also, a lot of these agents, there's a fairly low bar, so to speak, to becoming an insurance agent. You just basically have to take a test with your state insurance commissioner so that you have a certain level of knowledge what the products are and what your fiduciary responsibilities are and things like that. But it's not a very high bar to entry. So a lot of the agents, especially the ones just coming in, need a lot of support, they need a lot of mentoring, and they need a lot of coaching. And most of these insurance carriers are just really not prepared to do that directly. On the other hand, like I said, the insurance agents, they need marketing support, they need marketing materials, brochures, direct mail pieces, seminar mailers, all that kind of stuff that they need to project their presence into their local markets and write business for those carriers. They also need support with the legal aspects of insurance, because it's called compliance, and it's a rather complicated arrangement on, okay, what can I say, what can I represent when I'm talking to clients, can I put this in my ad, can I put that in my ad, and they really have to get those right, because there's a fair amount of legal risk if they're misrepresenting any of these products. So they also need kind of a methodical way to generate leads from the consumers in their area, such as doing dinner seminars or doing direct mail, doing emails, things of that nature that just basically drum up business for them. And then also, as I mentioned, they need promotional materials. And, the average insurance agent is a guy or gal working out of a storefront, and, they just don't have a lot of resources. They can provide the face-to-face contact with the consumer that the big insurance carrier can't do, but they don't have the resources directly that they need to effectively do that job. So to bridge that gap, and they need, especially when they're starting out, they need a lot of mentoring, and they need a lot of coaching, and they need a lot of basically emotional support from someone who is versed in the industry and can really provide that for them. So there is a third major player in this equation, and that is called an insurance marketing organization. And that is a company that is separate from the insurance carrier, but they are kind of the intermediary between the insurance carrier and the agent. And what they do is they provide, they're basically a conduit between the big carriers and the agents. And, whoops, sorry, got a little carried away there. And what they do is they provide all of these materials and all of this direct support to the insurance agents, and in return for that, the insurance agents, when they write a policy, it is submitted through the marketing organization, and the marketing organization gets a little piece of the commission and the premiums before they pass it on to the carriers. And that sounds kind of insignificant, but when you have a large sales force in the field that is selling, it can rapidly become an extremely lucrative venture for some of these marketing organizations. And usually these marketing orgs are run by producers. Insurance agents are also known as producers, and they are run by producers who have a lot of experience in the field. They are usually highly successful producers who basically share their knowledge, their experience, their tips and tricks of the trade with their insurance agents that they manage, and it makes for a win-win situation, because the agents get the direct support that they need, and then the carriers get all of the sales and the premiums and the policies sold without having to have the overhead of directly dealing with the level of the insurance agents themselves. So why don't I pause for a second and see if there's any questions about what I've gone over so far.
I think I'm pretty clear on it. The one thing that I did want to ask is, so indexed annuities, they're basically based upon the stock market, right?
It can be the stock market, it can be the S&P, it can be treasury bonds. There's a lot of different flavors, but it is definitely tied to the performance of some security out there somewhere, and it is a little bit riskier of an investment. A fixed annuity usually will not go down in value ever, but obviously a variable annuity can come up and down, and there's actually a slightly different license that you have to sell a variable annuity or a variable life product, because it's just kind of just shy of being a security, and there's actually some legislation in Congress right now that they're kind of arguing about whether or not these should actually be regulated securities and sold by the Merrill Lynch and Smith Barney kind of people of the world.
Right.